Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Craig Hemke and we're going to be talking about silver now over $25, gold holding up over 2100. This is also in the face of a bit of a move higher in the US dollar and rates, but I do want to start simply with the stocks, GDX, GDXJ, and SIL, the ETFs that follow gold mining and silver mining stocks. Look, there's been some encouraging things on the chart. One being higher volume, and two being the simple fact that GDX, GDXJ, and SIL have taken back about 2 months of losses, all from January and February. Just in the first 2 weeks of March, they're back to pretty much where they started this year. Craig, when we look at this overall environment of it seems like more interest coming into the stocks, the underlying metals prices doing better. How are you viewing some of these moves in those ETFs?
Isn't that funny? You're right, Corey. It's really a lot of those ETFs, if you want to use that as a proxy for the gold miners or the silver miners, a lot of them are just back to where they began the year versus what's gold up year to date now at this point. I have to think about that. $100, so 5%. So yeah, maybe still some catching up to do, but that's only because they'd had such a miserable couple of months before the last couple of weeks. You know, it all kind of, at the end of the day, it kind of boils down to where do you think prices go from here? If gold continues on to 2,300, then you attach some kind of whatever you think a proper gold silver ratio is, and you come up with a price for silver. And if you think then that drags silver higher, then the shares eventually will, they'll play along too. All I know is it sure is nice to not, even on myself, walking around with a frown on my face all the time because my personal holdings are constantly in red instead of green. But that's all right. I've always looked at my own mining portfolio more as like investments than trades. And I still think the long-term, thesis for the metals is pretty good. So hopefully from here, there's more potential reward than there is risk. That we found some floors in the shares and a lot of the major miners and in the ETFs. So maybe we found kind of a bottom, and so you've got maybe limited risk to the downside with potential for pretty good return to the upside.
Well, Craig, just to that point, if we really are breaking out in gold and we see it drag silver higher, the mining stocks will, of course, eventually put on their dancing shoes and get moving. But I think an interesting point, which we were kind of talking about off mic before starting this call, is that most investors really haven't missed this move yet. Yes, GDX and GDXJ have repaired some of the downside damage over the last couple months and 2 weeks, but they really haven't made the big moves that we see in the mining sector when these things really get into momentum. So for people feeling like, oh gosh, I've already missed it, there's still a long way to go in a cycle if it's really going to be a breakout bullish cycle. So maybe speak to the psychology when you talk to people on your side about having not missed it yet and also not selling too early. These things, it's still pretty early days in a breakout move, and this is coming out of a huge base that consolidated over years, possibly 13 years if you do the big cup and handle. So there's a long time that you'd want to hold these as a value investor.
That's for sure. And, like the SILJ, if that's reflective of the silver miners, has rallied nicely, but even it is still in a downtrend if you look at it on, the daily chart or the weekly chart. So it hasn't really done anything of significance yet. The gold miners are, rallying up, and they put in a really good looking bottom over a long period of time, a low back in November, a double bottom. Actually, a double bottom within the double bottom in February. It came down to that same level twice with a little island reversal 2 weeks ago on Wednesday, the 28th. And then we've rallied from there. Yeah, and there's, again, under this idea that the metals have a ways to go higher. Now that gold is broken out, eventually silver, should break out and attract the same kind of attention. And that'll drag the mining shares higher too. It's just, and the hard part is, whole sector is so out of favor and overlooked. You can't wonder when people are like, oh wow, their gold is priced at $1 per ounce for everything they've measured and indicated in the ground. Well, there'll be a time when anybody even cares about stuff like that when you can just simply buy Bitcoin ETF or Nvidia, and that's the hard part. Is viewed, I don't know if you want to call it value, but it kind of feels that way. And we're in an investing environment that Everybody, all the flows of funds are concerned with growth. And so, and that to me is the hardest part of the biggest piece of the puzzle to try to find, is what eventually what kind of metric, what kind of price, whatever gets enough, you reach this point of critical mass where the flow of funds actually comes into the sector again. And obviously we're not there yet.
Craig, what do you take away, though, from those charts like GDX, GDXJ, SIL, even SILJ? They just look so different than the underlying gold chart. You can argue that GDX, all those ETFs are still very much in long-term downtrends. Now, I know they're testing out some of those levels, but what does it mean to you when you do see a chart, quite frankly, that still looks, in a way, in a downtrend?
Yeah. It's like, remember 2 weeks ago, we sat and talked about, my disdain for Newmont and Barrick. In that, again, if you look at it as an investment, not a trade, and Newmont and Barrick being lower in share price than they were 20 years ago, with the price of gold 5 times higher than it was back then. And so as mining costs go up, the margins never seem to increase, and so the profits never increase, and so the share prices never increase. And so I guess, what eventually it takes is enough of a boost in the price of their product to widen out those margins and make people interested in them again. But that's why, again, you look at these ETFs or individual shares versus that price, and it just drives you batty, because it's like, you just never seem to get the bang for your buck and the leverage that we all have experienced in the past, but haven't seen personally now for quite some time.
Well, Craig, just thinking about the margins and the producers, a lot of generalists or people that only casually follow the space, they're not going to pile into a drill play or to a development story or a prospect generator. They're going to get into the producers first, maybe some of the biggest ones like the Newmont you mentioned, but also the ones that are held in GDX and GDXJ and SIL, which are the mid-tier producers. Do you think we're going to shift the narrative from a story of margin contraction to finally a story of margin expansion? Because with metals prices moving up, if most of the costs have moderated, they should start seeing margin expansion over the next few quarters. Is that possibly a value driver that's being overlooked by analysts right now?
Yeah, I mean, that's it. That's just it. That's something like that to make these stocks look like growth companies again is what it's going to take. Because again, if you just keep seeing, you're all in sustaining costs at, whatever, you just pick a number, $20 silver, and silver's at 25, and then silver goes to 30, and you're all in sustaining costs for 25, you're still just making $5. Nobody's going to get excited about that, and it's going to embolden short sellers and perpetuate this environment that we've been stuck in, really kind of for the last 3.5 years. But I mean, we really haven't had fun. We had a little fun in 2020, but we really haven't had a big explosion of excitement in short term since 2016. And so, yeah, some of these factors are going to have to come together. I personally still think, there's a difference between the rally in gold that's happened the last 2 weeks and the rally in silver. Gold has clearly broken out of a trading range. What's nice, I mean, it's frustrating for all of us to be in long-term trading ranges like we've been. But the nice part about that is the longer a trading range goes on, the more obvious it is to everyone when you break out. And that's what happened with gold back on Friday the 1st, 2 weeks ago. And now, all this money's been piling into gold, and open interest has been expanding, and it's surged. But silver hasn't done that yet. I mean, silver's got, for where gold broke out about 2,100, that level in silver is 28, maybe 29. And we're still dinking around here at 25. So once silver accomplishes what gold did, then you'll get this big mad rush into silver again. And as we've discussed countless times over the years, the correlation between silver prices and the mining shares is pretty tight. So when the time comes, as gold continues and drags silver, and then you get this rush into silver and silver moves into the 30s, okay, then finally we'll, maybe that you'll get the margins will expand and widen out, and we get machine investor interest following along too. But again, all these things, the important part about all this is that this is just a very early stage part of this move. And so even though some of these miners are up 10%, 15%, maybe even 20 from their lows a couple of weeks ago. I mean, they haven't done jack yet, Jack. And if we're right about how this can all eventually go, there is still plenty of time for anybody that wants to take a position in either physical silver or the mining shares. There's still plenty of time to get on board. I don't even doubt about that.
Oh, absolutely. I think this is what a lot of the gold, precious metals community was waiting for. A bit of a turn here. As much as we hear that stocks tack on 300 to 400% right away, it doesn't happen overnight. But 20+%, which we have seen in a number of stocks in just a couple weeks, that is a fairly strong move higher. And we have seen higher volume, especially in the majors. This just to me seems like all the, at least market-wise, mix that gold bugs, that precious metals investors are looking for. More money going into the majors, a turn off of depressed prices that look like they could have bottomed. Craig, what else could the sector be hoping for here outside of what we are seeing in the market?
Well, no, I agree with you completely, Corey. I guess my overriding message at this point would be, this is great, and gold is broken out. The 4 months in a row closing over 2,000 as a base of that breakout, and now surging higher as high as 2202 last Friday. There, I guess you could come up with scenarios where now gold pulls back, but I don't think so. I think now that's recognized, and everything's on our side to go forward. So that eventually drags silver forward, maybe even faster if silver moved higher yesterday with copper. So if copper can tack on 10% from here, that's going to drag silver along too. And so all of these things then will drag the mining shares. Again, like I said, my overriding message is, though, I wouldn't want anybody to get freaked out and go, well, okay, there's this bounce. I've missed the boat. And no, I wouldn't say that's the case at all. There's still plenty of time to be building positions ahead of, I mean, we had 9 months left in this year, and God knows what else is coming down the pipe. And then you get into next year and how that might all play out. So I think there's still plenty of time for people to position themselves accordingly and make, either get themselves some financial protection with the actual physical metal or, try to get some leverage with the mining shares.
Well, Craig, another point we should make, which we have made before, but reiterate here, is that this is also not happening in a vacuum. We're seeing gold breaking out and making all new highs, but it's not getting a lot of press coverage because guess what else is making new highs? Almost everything else. Like NVIDIA keeps rocking higher. The stock markets are breaking out, whether it's the Dow or the S&P or NASDAQ continuing to break new highs. Bitcoin, Ethereum, Dogecoin's back. The crypto miners, crypto ETFs, everything is breaking out in tandem. Do you think that makes the picture a little muddier than past cycles because you're not seeing gold break out against other asset classes? You're seeing it break out along with other asset classes.
Hey, it's a crack up boom one universal chart again, isn't it, Shad? A little bit. No, actually, I get your point. Frankly, I think it's fine. I would rather at this point, especially early on, have nobody care, nobody notice, and I think hardly anybody has. Maybe one random article on CNBC or Reuters, about how analysts are puzzled as to why gold's breaking out and all that kind of stuff. But it sure is kind of under the radar, which is exactly what you want, particularly as it pertains to gold, because it can be so counterintuitive from time to time. The time to get worried about the gold price is when everybody's excited about it, even within our sector. I mean, the old tried and true adage at TFMR is, if you're trading, you always got to be ready to sell someone things look the best, and you always got to buy someone things look the worst. I mean, things look pretty bleak back in the end of February, right? So that was proven again. So the fact it's not getting much publicity, that people aren't really noticing because they're distracted by all the other shiny objects off on the other side, that's fine with me. That is perfectly fine with me. And I think, again, foreshadows better things to come, even in the short term. Let's get through the Fed next week, see what Powell has to say and the market reaction to all of that. But there's so much stuff going on below the surface that can really shake things up. Bank of Japan meeting next week as well is another thing that people should keep their eye on. I think all of it foreshadows good things for gold, and then that trickles on down to everything else. And so, moral of the story, and we keep coming back to this. It's been a great couple of weeks. There are always going to be pullbacks. That's how bull markets work in the precious metals. But the little bitty pullback doesn't mean that it's all over with and you've missed it. I think there's plenty of good stuff to come.
Yeah, enough said, Craig. That is really the point of even what I'm seeing on the charts here is that this very well could be just early stage moves, and who knows how long of a upward trending or bull market for these stocks. They just need to get through some key levels on the chart, which, look, gold, totally different chart than what these stocks have dealt with. Now these stocks have a lot of catching up to do on the upside, and maybe we're starting to see that just in these first 2 weeks of March. Craig, thank you for your time. Always great chatting with you. Have a great rest of your week.
Yeah, thanks, guys. We'll talk to you next week.